Afternoon, how are we all doing? How's everybody? Survived the pound? That was a load of rubbish, wasn't it? Do anything. Afternoon, George, John, Christian, Ian, XR.news, Virginia, how are you doing? Emac, David, Bar. Isn't that a sheep, not a goat? Meh. I can't envisage a goat at the moment. We have to put a goat noise on, aren't we? There we go. There's your goat. Sounds a bit like a sheep. Same thing. Afternoon, Kennedy, if I haven't said that already. I'm not with it today. I started a 7-day juice detox today, so I haven't eaten all day. I've had 2 fruit juices, a ginger shot, and a wheatgrass shot. I am starving to death. So I've got a headache. I feel like I've got a cold. I've got no energy. Apparently this is good for you. But anyway, we'll see how I last. This is day 1, halfway through the day. This afternoon, I've got to look forward to at 4:30, another juice, and then a tiny soup at 7:30 tonight. And then I start the whole thing again. So if I'm not here tomorrow, you know why. And I'm going spinning later. That's going to be fun. Right. Anywho, let's get on with trading. So what's happened this morning? This afternoon. So we got the rates come out at 5.25 for the pound, which is what we were expecting, which is good. Bailey was boring as usual. He always is. The interesting thing was there was more votes for an increase. So some of the remainers have moved to increase. And we also had votes for a 5.25 increase. Basically, we're looking, from what Bailey said now, we're looking at 5.75 being terminal rate, which means we're going to hit it in October. So there's another 2 increases ahead, a 5.5 and a 5.75, and that should be it. As long as inflation is down to 5 point something by the end of the year, we're currently sitting at 7.9. So that's going to need a serious move of equal proportions to what we've just had over the next 2 months. If that happens, we will hit terminal rate of 5.75. So as I said this morning, which is kind of what I feared he might say, the market's reaction to that was, okay, fine, we're not going to really be that bullish anymore. Why is my pen not working? So we didn't get the rally off of it. However, we didn't get a drop. We got an initial reaction to the downside, pushed up, So we've not gone anywhere. So we hit ADR pretty much on the pound US, but we've not had any movement yet. So no clues really as to what the market actually really thinks about that. So we'll see. Not sure if it's good or bad at the moment, but there is more upside. We've still got another 0.5% to go, but we're getting to the realms now of the US dollar. When the US dollar started getting up to the 5s and now up to 5.5, we saw a definite slow in the rate of buying the US dollar because they're expecting it to be hitting the terminal rate. And there's other things out there which may well continue to rise, which means it will start to drop. So I think the pound is getting similar to that now, possibly. So either way, it's kind of a little bit strong, neutral to weak. There's no real massive advantage or disadvantage still in any other currency at the minute. So everything is kind of expected to go up and down and be range bound. No big strong squeeze is expected at the moment. So I think that's pretty much business as usual. Slightly less bullish, but we'll wait and see. Give the market a week, see what it does. See if it starts challenging new highs. And if it does, then we may see a little bit more of a bullish stance for the next couple of months, but nothing exciting. Unemployment claims out as expected. So we had bullish unemployment change. We've had neutral claims. So tomorrow, I expect we'll probably get a 3.6, possibility of a 3.7, 3.5 rather, but probably as expected. So we might not get too much off of that tomorrow either, but we'll see. So we've got 4 minutes to the open. So just to dissect basically what Bank of England said. Man voted to raise by 0.5% to reduce the risk of more costly tightening later, i.e. get ahead of the game, because we were talking about 6.25. Now it's brought down to 5.75. So he wanted to get there faster, but it didn't happen. Interest rates, inflation in 1 year's time to be at 2.82 as opposed to 3.83. So 2% is target. So they reckon mid next year, more like end, they will be down at 2.82, so 3%. So at that point, we should be able to start reducing interest rates. So interest rate forecast, they didn't really give any long-term forecasts that really mean much, but expecting to be down to sort of 3.7 2025, which is kind of what the US has forecast. So we've had this run up for months, for like a year and a half, and it will take equally as long to drop. So end of 2025, the mortgages will start to be cheaper. Dow is selling off again pre-market. Did this yesterday and this morning, didn't it? Market's selling off ahead of the open. In all of that was a load of waffle, which there usually is. But this is the key thing here. The traders see a 68% chance of a 25 basis point hike next month, and then a 32% chance of it not happening. And if we're going to go to 5.75 as the forecast peak, there you go. We'll have one more in September, and that'll be it. So it's very mixed, very mixed. The other, what else do we have? I think that was it. Is there anything else? Yeah, then we had the jobless claims. That was it, I think. CPI expectations this year at 5.4%. So we're going down to that 3% target this time next year, towards the end of next year. So by the end of this year, we should be down to 5.4. We are currently sitting at 7.9. So 2% drop by end of year, pretty much on target. So that's all we've got, meaning we're hitting the top of that curve. Read into that what you will, but there's nothing particularly guiding, I don't think, in any of that today. Got 17 seconds to the open. So this is a new version of the new opening range breakout. Well, not the opening range breakout, the new index EA that I'm building just to do modeling. This should take pre-market ranges today, if they're not too big, which they are on the Dow, but it is taking the NASDAQ and the S&P. It works. Fantastic. That's all good. So this is doing some testing on stops and targets, basically. I won't go into any detail because you don't need to know, but hence why it looks a bit messy. So Dow, if you've taken the pre-market, that's a big pre-market, so that wasn't taken. So it will now look at taking the 5-minute instead. So that was too big. Maximum range is 530. The actual range there was 690. That's too big. So that's been skipped. Long on the NASDAQ. The S&P is still inside range. You would have been triggered short on that if you'd have taken... No, you wouldn't. No, you wouldn't. So that's your actual pre-market range. So the Dow hasn't triggered yet. Neither has the S&P, but the NASDAQ is long. A lot of volume coming in today. A lot of volume. So we might get a good run today. So just quickly looking at where we are. So the Dow, obviously the DAX this morning was a beauty. Didn't get on it, but Well, I did get on it, but I got on it on the Dow pre-market. But that was an absolutely beautiful ORB today. Pre-market and the 5 was little bit tricky because that was the 5. It was way too big. So all you got was a chop after the 5. But the pre-market today was absolutely gorgeous. There's an awful lot of volume coming in, but it's not directional at the minute. It's going nowhere. So very strong moves. You'll notice this version of the EA is not using a stop loss. So I'm testing a hedging exit strategy at the minute. Okay. We'll leave that to run for a minute. We've got 5 minutes, 2 minutes left. Catch up on the chat before we go and have a look at the FX. Afternoon, Marco, Brian. You need an FX smoothie? I know. I've got such a headache. The other thing, I'm not allowed to have coffee either. So I haven't had coffee this morning, so I'm on caffeine withdrawal. So I'm on caffeine withdrawal, food withdrawal, and being forced lots of sugary fruit. Never a good thing. And I can't eat. Not good trading while hangry. I'm not hangry. I just feel like I've got a headache and I just feel like... It is only day 1, though. So I'm hoping this is going to get better. If it doesn't get better, I can't last this for 7 days. I'll die. Isn't a goat in the US means the dog's bollocks? Yes. GOAT stands for greatest of all time. I am the GOAT. Top-notch traders being referred to as the GOAT. Yeah, greatest of all time it stands for. Afternoon, Crumb. Day Trader FX. Great. Steve, JC. Cool. Right, let's have a look at what's happened on FX while we're waiting for these markets to figure out what they're doing. I'm going to go for a 5-minute OLB on the Dow. Got another futures account running because the one I did this morning I did $3,000 on and I can't trade it anymore because that's my maximum. So I missed the beginning. What's the problem with your diet? Nothing's wrong with my diet. I'm just doing a detox for 7 days. So basically no food, just juices and soup. And wheatgrass shots and ginger shots. There will be something wrong with my diet if I don't get food. I'm going to kill someone and steal it. What's the diet? What's with the diet? Oh yeah, no, just it's basically just a detox thing. It's really good for just detoxing, basically, I suppose. Done it before, but not this one. Watch the sugar spikes. I know it's lots of sugar, but it's not refined sugar, so it's actually good sugar. But anyway, I'm not here to talk about diets. ADRs, oil. 5 minutes just gone in. Let me just quickly check that took trade. Didn't trade. Why didn't it trade? 5:30, 40. Oh yeah, it is over the max range. Good boy. EA's done its job. Yeah, no trade on the Dow today. I've done one. I've just gone long, but according to the new rules I've got, those ranges, the pre-market 15, 5, etc., and the open are too big to trade today. In theory, it may not go anywhere. Right, so hedged, short on the S&P, long on the NASDAQ. Moment on the pre-market. The 5-minute opening range, you look like you're just about to try and break long on the S&P, and the 5-minute opening range has just double topped on the NASDAQ. So lots of volume. There's so much volume coming into the market. It just can't get anywhere at the minute. It's just equilibrium with buyers and sellers. Dow looks like it wants to break. has broken. Everything's breaking long, so hedged on the S&P. Right. Juicing not good at my age. Need the fiber. I don't know. I'll find out. At my age, how dare you? Sound like Greta Thunberg then. How very dare you? Afternoon, Amy. Right, ADRs, WTI, oil. So we were looking at oil yesterday. I had my little alert set, which triggered. I was talking this morning about this pullback. So we looked at this morning in the live room. Basically, that move there and that move there. That pullback there and this pullback here. Yeah. So I said this morning in the live room, perfect long opportunity. Wait for the reverse alert, take it long. And it's done exactly that so far. So whether or not this is actually going to go, you've had an hourly reverse alert on there now. So if this is just going to mimic that move, this is long from here. So that did trigger. We've done 125 ADR to the upside, which has obviously come off because it's exhausted. We've got that propulsion gap there. So we'll probably find we get some resistance there. But if we can break through that, we're off to 83.5 a barrel, I reckon. So that's a good looking trade this morning. I can't remember where the alert was. I did set an alert. It was at 79.52 there. That was my alert to go long, which triggered this morning. So good looking opportunity for longs on that. But the danger on this is that this is just the start, that reversal alert and retest there. It's just the start of a pullback, which is going to be a deeper pullback. We don't know, obviously, but both scenarios could easily play out today. Dow's pulled back inside the inside range, back inside the opening range. NASDAQ is still running, trying to. This thing's up and down like a lunatic today. So much volume. Earnings today, obviously, this is off the back of yesterday's PayPal, Shopify, Etsy. We've had Alibaba this morning as well, and a few other pre-markets. We've had Fiverr. So this is all this aftermarket activity from yesterday and all this pre-market this morning, not Airbnb. So this lot is all being traded this afternoon. So there's a lot of volume coming through the market. Tomorrow is going to be just as good because we've got Amazon, Apple, and Coinbase and Gilead. Gilead are very big. Big movers, Gilead. Used to be a really good stock to trade. So that's all going to kick in tomorrow. So that's why we're getting all this volume coming in. But there doesn't seem to be any direction. There's as much buying as there is selling. So nothing's actually making any progress too much. Right. Okay. So we've got pretty much a 2R on NASDAQ. I've got a trailing stop, which is kicking in automatically. So the idea being every time we get to 2R from the opening range, we will get to a break even. If we get to 3R, we will lock in 1R. If we get to 4R, we lock in 2R. So when we catch these nice runs that go through trends, we've got a trailing stop that allows us to capture all that profit. We're always locking in 2R. And then as we get higher, maybe 4R, it will then start to lock in 1R. So the further we go, the tighter that stop gets, because we want to lock in a load of cash because we've got a 4R return. We don't want to let it come all the way back down to here. So it will automatically adjust the stops based on the volume and the volatility of the trend as it goes, which is what I'm testing at the moment. Got a back test running on this at the minute as well. So. But you'll notice there's no stops. So there was no stop. The trailing stop only kicks in when we get to 1R. So if we open like this, we just sit there and wait for something to happen. When something happens, then we would get on that move. We will take it off, and then we wait for the market to pull back before we take the second position off, which banks an average net. Hedging variation that I'm running on the open. Dow short. So gone short on the Dow. Right. So that was the only ADR on oil. The other ADRs we've had today have been euro pound. So euro pound straight up to 125 ADR. You've had your reversal alert there, but no real traction yet. A bit higher, a bit far away, that one today. So it has just triggered, literally just triggered in the last 5 minutes off of 125 ADR, but it's obviously a stretch off the back of the news. Pound Swiss, as you can imagine, everything's pound related today. Pound Swiss hit to the downside. You're just about to get the reversal alert on that one as well, on this candle, if it closes high. And you've got pound yen, which has also hit 100 ADR. There's your reversal alert and retest. So not a very pretty W, and it's kind of still sitting there. So market really not happy with this pound at the moment, but those are your ADRs today. Nothing particularly exciting on these at all. They're all very difficult to get into because of off the back of news. So just about to get that alert. You've got 2 minutes left. If this candle closes bullish, that will give you the alert for the long. I don't see a problem taking a long on these pounds. I'd much rather be taking ADR hits to the downside, assuming that this move isn't valid. And that we are going to get some continuation up on the pound. So we'll see. RSIs, very similar. A little bit of a whipsaw at the moment on the Dow, but so yeah, RSIs, ignore the 14s for the moment because we've got a lot of volume coming in at the moment, a lot of volatility. So we don't really need to worry about them at the minute. Probably next week is when we should really start looking at the 14s in more detail. We have still got volume coming in and opportunities at the moment. So pound Swiss and pound yen, same thing. So RSI is extended to the downside. Yeah, we've also got the ADR hit. Good example of why we don't trade both strategies. Don't trade ADR reversals and RSI extensions because you're going to get in on both. Just take one or the other, usually RSI, unless you're scalping. So pound Swiss, looking for a push back up into there, potentially all the way back up to there and above and beyond. Yeah, so the pound should remain bullish. We are bullish pound. We've been bullish pound for ages. Not so much on the pound Swiss, actually. That's probably about the only currency that the pound hasn't been bullish against. It's been bullish against everything else. But so yeah, pound Swiss totally sideways. So any downside hits, you know, every downside hit we've had, pushing up. So I don't see any problem taking this. If this does break that low, though, market might collapse on that one. But it's going to take the euro to pump really hard and the Swiss franc along with it, which is unlikely. So, so pound Swiss, that's extended to the downside. You got the pound yen, also extended to the downside. That's the ADR hit. That's a 50% retracement. This propulsion gap holding up, not very good propulsion gap, that, to be honest. I'd rather see it back here towards this block here. But yeah, long still on that. No reason why it shouldn't be, I don't think. And US dollar CAD is your only other RSI extension to the upside. This got extended yesterday above the 75. It got extended again this morning above the 75. And now it's starting to push back down again. So already short on this one, looking for an entry, an exit down there. Done a couple of drawdown controls today. One on pound US dollar. Sorry, two, both of them on pound US dollar today. So two drawdown controls on the pound US dollar on the news. So second one from that initial position, and the second position taken there, just done one on that one as well. So average is 150 ADR at the moment because we've basically pushed down and hit ADR today. So yeah, looking for that push back up again. So we're obviously downtrending at the minute against the US. So depending on what happens with the US dollar tomorrow, we may get positive news, we may get negative news. Don't know, but if we get unemployment going up tomorrow, or potentially unemployment staying the same, because the US dollar is having negative reactions to all neutral and negative news at the moment. So if we get a neutral tomorrow, we might get a pump on the US dollar, a dump on the US dollar and a pump on pound US. So we'll see. But that's all we've got RSI and ADR wise. So there's been a few opportunities, 6 positions on this week. Although that one's been on for a couple of weeks now. But yeah, Just waiting for stuff to unravel at the minute. Lots of movement, but very gradual. Afternoon, Monkey. It's time. Isn't there a gap to the high side on the Dow? Nope. No gaps at the minute. There is on the DAX. Got a big one on the DAX. That will get filled. I mean, it could be today that we start a move. The US markets are all over the place at the moment, so you can't really gauge anything from what's going on in the US. So we're 20 minutes into the session, and we've not gone anywhere yet. NASDAQ's doing all right. There you go. So above 2R now, profit locked in, guaranteed winner on the NASDAQ. S&P is just starting to rally. Dow also. I haven't coded this bit in yet, but that is what it should do. I haven't coded that bit. That's the bit I was just about to finish when I came into the live room. But basically, idea being, when we get to 3R, I want at least 2R locked, because that's pretty much guaranteed profit now. So 2R locked in. Very tricky price action at the minute. Market's still not got a directional bias on the S&P. The Dow's really not any idea either. So that's where we opened. Yeah, that's how much we put into the upside. That's how much we put into the downside. No idea. Pound New Zealand, have a look at that. Afternoon, Gordy. Euro New Zealand, Euro odd, check that. Gap around 35,625 on the Dow. Uh, 35,625, but that would be intraday. Do you mean this one? Do you mean this here? I mean, that I'd class that's filled. Look, that wick down on Wednesday, Tuesday, we pushed up into that wick. I'd class that as done. Depends what. I mean, then you got to think about with a gap. There's traders left offside in those gaps. Technically, yeah, market closed there and it traded up to there. So technically, yes, there's that much of a gap. That will be written off as a loss. They wouldn't, if it's pulled away that hard from there, I doubt it. But I mean, this is coming up. The Dow is going to rally. Yeah. There's nothing but downside for the US dollar on the cards. The indices are going to start to rally. It's going to hit that anyway, but it's not going to hit it because it's a gap. It's going to hit it because it's going to go bull soon. So it will get there. It will get there. S&P is still rallying. I'm going to have to manually move this again. If this gets to 4R, drag up to 3R stop. We're long on the S&P as well. Dow's back inside the basically back to the open, back inside the opening range. Total mess, apart from the NASDAQ. Right, Pound New Zealand. So Pound New Zealand at the moment, it's really weird. It's kind of like a wedge a minute, but it's range bound, but the range is contracting to the upside. Obviously, we're assuming the pound is remaining bullish. So they've bought out that propulsion gap at the moment, straight into that propulsion gap. So we're fighting between these two levels at the minute. Whichever one of those breaks, obviously, will start to move. I would be much more bullish than bearish on this at the minute, based on the pound and the negative news that we've just had on the New Zealand. But the market's not really made its mind up about the pound at all at the minute. So the US Open for the pound, bit bearish, but not massive. Yeah. So the US market's not really making anything of this either. So pound New Zealand, I would just sit on the sidelines at the moment. No reason to get long, no reason to get short. It's more of a short than a long. I had a short on this on the other account, which I got out of. Oh, there you go. Ta-da! So I got out of that pound New Zealand short there. Put a trading stop on it ahead of the news. The news has spiked me out. So out of that one. But overall, I would go long in a position on it. Euro odd. Short on that. So this is an entry from yesterday. So that's your RSI extension yesterday for the H1M5 mean reversion. So I'm just in the one position short at the moment, waiting. Aussie dollar weak off the back of the news. New Zealand dollar weak, helping the Aussie dollar to become weak as well. We've just got no power in the euro at the minute. We've had that Swiss franc rally, which has helped this, and obviously the Aussie news, which has helped it a bit, but the euro's got nothing at the minute. Not moving anywhere. So shorts from there after that big RSI extension and ADR extension. Yeah, just looking for a push back down into propulsion. See how we go. If it pushes up further, obviously, I'd take another position and move target back down to that propulsion. Can't believe how much volume is coming into this market and how little movement we're getting. It's spiking like crazy. There's so much volume, but we're just not going anywhere. It's almost as if there's literally, for every person that wants to sell a stock today, there's someone else on the other side, and they're not interested in moving up one tick or down one tick. They're just fighting over it. It's just not, just can't get anywhere. But on a real high volume as well. Very interesting. So still rallying on the NAS. So yeah, euro odd short, waiting for a drop at the moment. We got this high coming up. So that high is 3 months ago. So that's a 3-month high, quarterly high. So if we do manage to get up to there, I'll take a second entry on that. Half an ADR on this. So an ADR on this is 181. So somewhere in the region of $180. Yeah, I'm going to, that's 150. So I'm going to need to take, if we get there and we get a decent reaction off of that, I will probably take a manual there, because that's more, might just get an EA on there. I've got 3/4 of an ADR apart, my entries are. So that would be tight if we react off of that high. But it's either going to come down and test that and then continue this really weak rally that we've got going, or we're going to push up and get some kind of reaction off of that level to drive it back down, I think. So either way, it's just waiting. Might be a wait at the moment, because we're not getting a massive amount of movement. Long on Aussie CAD. Nope, I'm not, but yeah, you could be. It's just side. Look at this. I mean, this is Christmas trees. Red, green, red, green, red, green, red, green. It's like Christmas down there. Not interested in Christmas in the middle of summer. No, not going anywhere. Australian dollar, very weak off the back of their figures. The fact they didn't put their interest rates up has screwed them again. You'd think they'd learn. You know, it's like you look at the interest rate on the Aussie. Oh, it's this week, not last week. So it's just 4th of July. Last one. There, wasn't it? So it was the previous one, wasn't it? June. Can't remember what the last one was. Actually, looking at it against the CAD is probably not the best thing, is it? But when you don't put your interest rates up when your inflation is so high, the market tends to just go, you're nuts, and they dump it because it's a double-edged sword. It gives the market an opportunity to buy it cheap because you will put your interest rates up because your inflation will not go down if you don't. So they sell it off and then they buy it back and then it gets a rally. So for now, you should be expecting drops in the Aussie for the next few weeks, I would expect, or at least some sideways movement. There shouldn't be any strength in the Australian dollar, especially as the New Zealand dollar's just had weak news. S&P's just gone out the highs. 4R locking in 3 on the NASDAQ. Still haven't got 1R yet. There. NAS is running into a previous resistance, which is that's last week's low. Apparently. 2-week low. Yes, just all the lows we were bouncing off of, we've broken through there and now we're retesting them. So this could act as a springboard down, but I think this is just a pullback on a new long opportunity. If you look at all these indices, look at what we do in a trend. So we push, we pull back to the 72, 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 24 in a shallow trend, back to the 72, 72, 24, 72, 24, 72. Yeah, that's a bull calm market. That's what we're back in now. We've moved back into bull calm market. ADRs are dropping. So 24s and 72s is where you want to be buying. So I think this is just a pullback on a new leg up on all these indices. So all good spots for long-term buys if you want them. So if this is a shallow pullback here, if it's a deep pullback, scale in and wait. Same with the NAS. Dow is a little bit of an anomaly at the moment because it's a little bit out of whack with the others, but it will get there. We'll get back to it. We're going back a long way for the Dow. But you see the Dow is a little bit more, it doesn't get as far and the movement is a lot more jerky, basically, on the Dow. So I think this has had a much tougher ride, the Dow, than the others. And we've only just started getting back into trend on this. So all of them, though, I still think we are going to go long now because the US dollar is going to drop. S&P's running out to new highs. Stopped out on the NASDAQ. Nice little profit. It's $1,000. Dow still hasn't gone anywhere. Rubbish. News coming out. 52.7. Why did that not ping up on my desktop? 52.7 off of a 53. That's negative US, which again should be a little bit more bullish for the indices. Not doing anything. Really, really, really disappointing day. All this news we've been waiting for, and literally the market has not even sneezed at it. Really not even sneezed at it. Pound US dollar is just whipped. Not interested at all. See if we can get some movement. S&P's just taken out the new highs. NASDAQ still running. Still can't get anywhere though. Okay, so stop loss on this now. We've got to 1R. The reason I'm testing this variation on the strategy is what I've identified in range bound days or rotation days is you will often hit 1R outside the initial opening range, and you'll hit 1R in both directions a lot of the time. So if when you get up to this area, you start trailing a stop, if it's going to break, you're going to make money. If it's not going to break, you're reducing your loss by 50%. And then you can take a break in the opposite direction if it's hedged you out at the start of the session, basically. So it's a way of basically on the losing days, actually just taking a very small loss rather than a double-ended stop out. Occasionally, you will get caught out on a big whipsaw open and then it goes into a massive trend and does 5R. Those days are going to hurt. But from what I've seen and the back testing that I've done so far, it's got pretty good results. I'm just testing something else at the moment. What test is that doing? 18. Oh, blimey. That doesn't work. Pound US dollars rallying. So US dollars dropping off the back of the ISM services. Euro US dollar will be pushing as well. Gold will be on the move. Total whipsaw though at the moment. So welcome to summer trading, everybody. Oh my God, there's a pumper in here. Golden thoughts become golden things. EFSH, next penny runner, 2 subsidiaries under strategic review, spin-off shares or asset divestment to special dividend, 6 million market cap, 90 million review this year with significant cash flow. Good one. What's your name? Jordan Belfort. Selling pink sheet shares in YouTube chat channels. Good luck. I love wild blueberries with cinnamon, you twat. Bye-bye. Oh, God. Pumping shares in a Forex group that's got nothing to do with stocks. And yeah, anyway. Bye-bye. I thought we'd lost the spammers. Do you know who we haven't had in here for a while? HelpyFX. We haven't seen HelpyFX for ages, have we? Good old HelpyFX. Wonder how many pips they're guaranteeing us now. 3,000 to 1,000 still, or 3,900 to 11,240. Pretty precise, isn't it? I mean, it's amazing that they can manipulate the market to such an extent that they can guarantee you that much accuracy on what they're going to return you. We haven't seen them for ages. Drop the ban hammer. He's banned already. He's gone. Oh, it's like those crypto pumps, basically. So you tell enough people about it and you get enough mugs that think, oh, that's good, that buy it. Basically, all he's done, that guy, is him and his group have bought that stock, which is a penny stock. It's never going anywhere. But you get enough idiots to buy it at pennies and someone dumps $100, $1,000, $500. The thing pumps. The guy that bought it at 2 pennies can sell it at a 50 to 100 times return. And then it dumps. And everybody that bought it loses all of their money. There's only one person or one group ever make money in a pump and dump. Jordan Belfort, Wolf of Wall Street. That's exactly what he did. He was a pump and dumper. And all he did was make an absolute fortune and use everybody else's money to do it. Clever. But it doesn't work in this day and age in YouTube comment sections, especially when there's 70 people in the room. If you're going to do that, why don't you go and pick somebody that's got thousands? Shows you the intelligence of these people, doesn't it? Anyway, carry on. So Dow is a whipsaw high, whipsaw low at the minute. So not going anywhere. Does look like it wants to break long. Obviously, NASDAQ's broken long, S&P's broken. Might get a bit of a rally today, but doesn't seem to be any directional bias at all in this market. Right, that's all I've got today. There's nothing else to discuss. Pound yen is the only extension we've got now. Left on its lonesome. That's the only thing that's extended on RSI. Everything else is coming out of RSI extensions. So it is all starting to move a little bit, but not a lot. So pound US dollar's rallying up. So we'll see if we can get some movement. Is this all US dollar? Yeah. So this is a strong move down, strongish move down on US dollar off the back of that. You see what I mean about the news at the minute with the US dollar? Every single negative news it gets, no matter how tiny that negative news is, it completely collapses the US dollar at the minute. So there's nothing bullish about it at all. You know, you get bullish news and the US dollar does this. You get bearish news and it does that. So every bearish news, if this unemployment rate comes out at 3.6 tomorrow, or God forbid it comes out at 3.7, kiss the US dollar goodbye, which means pound US dollar through the roof. But we wait and see what happens. So plenty of time until that happens. I can't type today. Brain not working. Your brain's not working. Try not eating food. I missed my spin class this morning. Nobody mentioned, did they? It's Thursday morning. I wasn't sitting here in my gym kit sweating. Nobody spotted it this morning. I didn't do my spin class this morning because I thought probably best not to do 2 spin classes a day when you're not eating any food. So yeah, we'll see how that goes. Tune in tomorrow for Hangryly. How did you handle the drop during COVID? I don't know. It's business as usual, really. I can't even remember. I don't know. It only lasted like a few weeks, basically. So I don't remember making any big losses in it. I think with most of the stuff that I was in at the time, most of it went that way, basically. So anything basically that I was in got hit. So I got out basically very, very, very quickly. Stopped trading, obviously, when we knew what was happening, because there was you couldn't get into any long opportunities. There's no point in trying to mean revert this. Obviously, there was a beautiful mean reversion opportunity, but I don't remember getting into any massive trouble on COVID. I really can't remember. I should do, really, shouldn't I? It's only 3 years ago. Can't remember. I certainly didn't make money that month because I had 2 weeks. I remember having 2 weeks off after it because obviously the kids were off school. as well. So that was when we got. Was that when we got locked down? I can't remember the actual. Was that the actual lockdown? It was, wasn't it? I can't remember. It's all a blur that point in time. But I mean, if you get into any areas like this, there's nothing much you can do about it. You will get to a point, and I did it on. I think it was the Aussie New Zealand before Christmas. Yeah. So on the Aussie New Zealand before Christmas, when I was long on it from here, it's a similar sort of thing. Obviously, the move is a lot more protracted. This happened over a matter of weeks rather than in and out in a week and a bit. But I basically cut the whole thing for about 11% there after having scaled out of 3 or 4%. So the whole thing would have cost me 10, 15% overall. So in those situations, what you do is you take a loss. Yeah. If you suddenly see your P&L from any position that you're in, go like 2%, next day 4%, next day 8%, next day 10%, and you've done drawdown control along the way, and then you get another down day, you have to get rid of it. So your options are you scale out partially and hold some and hang on, because don't forget, if it's dropped that far that fast, it's going to bounce. Look at COVID. That was a 100% bounce in a couple of weeks. You just get out with a loss. I did it with oil as well last year. So I had two big losers last year. Aussie New Zealand was one of them. I honestly can't remember COVID at all. Certainly wasn't in that pound US dollar. Yeah, it's a 2-week drop and a 2-week recovery. I don't remember. Oh, look at that. Yeah, don't know. Don't know the answer to that one. Honestly, can't answer it because honestly can't remember. But if you look at the size of that euro yen move, for example, so I'm just trying to think. ADRs back then were higher. So we were something like the pound. What's the pound New Zealand now? 210. So the pound New Zealand back then was about 350. Jesus, look at that spike. Black swan. Didn't really get affected there, did it? So yeah, pound is the one you want to look at, pound US dollar. So if you're looking at something being sort of in the region of, this would have been about 200. You're looking at about 8 to 10 ADR in 2 weeks. So you would just get to a point where you'd be like, holy crap, we've done 300 ADR. Holy crap, we've done 400 ADR. Holy crap, we've done 300 ADR. Something's wrong. Out. That's your mentality. But, because we position trade and the size that we're taking, by the time you get to day 3 of that, and you've had 3 completely abnormal moves, you know what's going on. It's on the news. Yeah. It's like when a war breaks out. If, for example, Russia was to fire a missile into Poland, right? I would close everything because World War III is about to start. You have to react to it. That was kind of one of those things where it slipped back fast and you're like, oh crap, let's get long on this. And then it did that twice in a row and you're like, hang on, that's not right. But you know why it's not right. And as long as you know why it's not right, you know what to do. Oops. So yeah, but I can't remember. I can't remember that far back. Certainly wouldn't have been a good month. Would have been one of the bad ones. Or just interested when I'm back testing to see those situations. Yeah, I don't know. I can't remember. Because I can't remember, I would assume that I wasn't in. Because I remember the squeezes. I remember squeezes going back like 2021. I remember the US dollar Swiss squeeze before Christmas, Aussie New Zealand last year. When you're in a big one that lasts for months, you remember it. I don't remember squeezes over COVID, but I do remember being flat for weeks. But I don't remember what my P&L was. So it wasn't that bad because I would remember it. You know, if it was one of those ones where you wiped off 40% or 30% of your account, you're going to remember that. It wasn't that. So I was lucky. Same as the US dollar Swiss franc peg removal. I was short US dollar Swiss when they removed the Swiss franc peg. That thing came down 1,000 ADR. I was short on it. The only reason I remember it because I didn't get paid on it because the broker went bust. But I was short on it and I remember it because I was in it. You only remember stuff that happens to you. You know, people say, oh, do you remember the crash of 2009? Nope, wasn't in it. So I was in that, but if it's, you know, it's kind of like business as usual or, oh, that wasn't good. You know, you're never going to remember those sorts of moves. Yeah. Hopefully we don't get another one, but we'll be more prepared. It's only the unprecedented events that you're never prepared for. So we're prepared. We've been prepared for this. We've had housing market crashes. We know what to do in housing market crashes. We know what to do when banking sectors crash. We know what to do when wars kick off. We've never known what to do in a pandemic. The market just went, screw this, I'm out. And they pulled everything out. And as they pulled everything out, some things went worse than others because it depended on where the money was. If there was more money in that currency and they pulled it all out, that one obviously got hit more than the ones that had less currency in them. So stock market, obviously, everyone went, screw that, get out the stock market. Everyone's going to go bust. Why? Because they can't trade. Yeah. So all the money comes out of the stock market, goes into the safe havens or into gold. You know, I don't know what happens. Let's be interesting to see what happens to gold. Obviously, I wasn't trading it because I don't do it. But and again, it's difficult. Yeah, look at that. Price of gold. Gapped. You know, I mean, you can't survive these things. If that happens, you're stuffed. Nothing you can do. You know, look at that. So from there, it gapped down to there, and then whoosh, spiked straight back up. Gap fill. Talk about a gap fill. Look at that. Straight up, filled it. Oh, that's oil. Well, that's gold. So oil collapsed. I thought I'd selected gold then. 2020. March 2020. So that was July. Yeah, see, look at oil. Sorry, gold. But look at that movement on gold compared to the FX moves. You know, we have moves like that on gold. It's not dissimilar to that, is it? That's just normal. Just normal stuff a lot of the time. But you know, the price of gold collapsed, which would, and you know, you would think as it's a supply and demand driven product, as the world started to lock down, you couldn't get things in and out. So therefore, you would expect supply and demand rules to increase the price of something like this, because if you can't get hold of it, it gets more expensive. Opposite effect. But then it obviously went back up again. So nothing you can do. You'll get very few of these events. I've lived through, in my trading career, I've lived through two Black Swan events. Literally, I've lived through two: the Swiss franc peg removal and COVID. Those are the only two Black Swans I've lived through, and that obviously was nowhere near as bad as the peg removal. The peg removal was catastrophic, life-ending. Normal candle, peg removal. Yeah, I mean, the brokers didn't even survive this. The brokers went bust. The banks went, everyone went bust. No one got stuffed because no one could pay anybody. You know, it's like your broker can't phone up and say, hey, you owe me money. And I would turn around and go, but you're bankrupt. How can you sue me if you're not in business anymore? And equally, I went to the broker and said, hey, you owe me money. And went, sorry, we're bust. Everyone went, no, sorry, we've all run out of money. No one won in that, apart from the Swiss. The Swiss made a fortune. The Swiss National Bank made a fortune. But you do not get black swans like that anymore. Very, very difficult to create a black swan like that because everything's electronic. So, look at that move there on the US dollar Swiss. Vroom. That, again, Swiss. Bloody Swiss again. That is the Swiss franc going, we said we're not going to increase our interest rates. Ta-da! They went up. They didn't say they were going up. No one expected them to go up. They increased their interest rates and everyone went whoom, into the Swiss franc. Collapsed. Everything collapsed against the Swiss franc. At the same time, yeah, euro. Whoom. But that's not a black swan. That was a holy crap. Need to get out of any longs we're in, any shorts we're in on the Swiss. You get out, yeah, because you can't survive it. Fundamental shift, and a big one at that. And this was when we were all talking about, shall we increase our interest rates to pay for COVID? The Swiss went, no, we're not going to do that. Surprise. And, they do it for that reason, because they can make a fortune out of it. Same as the yen, yeah? With the yen intervention, we're used to it now because they've done it so many times. But the Japanese turn around and go, hey, if you don't stop selling the yen, we are going to buy it all. And you are all going to lose loads of money. And you go, yeah, whatever. And then they go, bang, and they do it. And you go, you won't do that again. Bang, bang, collapse. Yeah, we know about it now. We know how to deal with it. When the yen starts saying, we're watching the Forex markets closely, you do not do anything but buy the yen. Because if you do the opposite, they will kill you. What did they do at 145? They said, if you don't stop, we will do it. And everyone went, all right. We knew we had to sell everything against the yen there because we know that's what they do. When we get back to 145, I shall be in here probably next week or the week after saying, do not sell the yen, buy the yen. So you want to be short everything against the yen because you want to be buying the yen. Yeah, we know about these things. So you can prepare for some of these events, but others, you can't. Just part of doing business. Those are the events where you're going to lose a load of money because you don't have a choice. GU a good buy? Yeah, I'm in GU long. Trend monster. I don't think today the fundamentals have shifted on this. I think that downward move we saw on the news, I don't think that was right. That's right. The fundamentals are long, especially now we've just had some negative US news. Obviously, that's kick-started the move, isn't it? So off we jolly well go. Yeah, good looking long. Unfortunate, I had to take that aggressive drawdown. Well, that drawdown control. It's not aggressive, just a normal one, but follow the rules. How much would you have gained in the Swiss bank debacle if the broker paid out? I had in my account at the time just shy of $5,000. When I last saw the trading, basically what happened was in that move, your P&L like this basically was normal. The last time I saw my P&L, it said 2,300 and something profit. Yeah, so it's a 5K account. That's all it was at the time. The P&L went from the normal few hundred to $2,500, and then it went back down again. And I was like, wow, what the hell was that? Then it went back up again, and then it froze. And that was Alpari going bust. Then it was frozen, and I was like, hey, my P&L's frozen. So I couldn't see what was going on the chart. At that time, it was like there wasn't charting online. Trading View and stuff like that wasn't around. So if it was around, it wasn't used. So it was a case of what's going on the phone to Alpari, engaged. On the chat system to Alpari, shut. Yeah. Put a support ticket in. You are 2,750 in the queue. Yeah. That was it. It was absolute bedlam, panic. I couldn't get in to close my position. I couldn't get in to do anything. And then my P&L vanished. Everything went. It just shut. And I was like, whoa. Count went to 0. So luckily, I had taken a screenshot of the account when it froze, so I could prove that I was $2,300 or whatever the amount was in profit. Probably still got the screenshot somewhere, which I had to then send off to the solicitors to go and start the process of claiming the money back. But when I last saw it, I was on the hourly charts, so I don't know what I would have made, but I was somewhere around here, I guess. So, you know, that was about 2.5, 5, 10, 15, 20, I don't know. But I would not have held it if I was trying desperately to shut, because, you know, you want to shut it. You got 2.5 grand. That's 50% increase on my account in one trade. Damn right, I want to close the thing. I'm looking to make a couple of £100. I made 2.5 grand in a couple of minutes, but I didn't. So all I got back was my account balance, and I didn't get paid out on the trade because obviously Alpari couldn't pay it because they went bust. Why? Because I was an ABRIC customer. Why? Because I wasn't doing very well. So what happened? They took the other side of my trade. Couldn't get the money because they went bust. They had £45,000 apparently left in their account by the time they paid their traders out, and they couldn't pay any of the traders the balance of their actual P&L. They could only pay them the deposit balance they had held secure. So they couldn't pay you because they went bust. The reason they went bust is because they took the other side of the trade. They got it wrong. That's it. It happened too fast. They couldn't close. They couldn't do anything. They couldn't get their orders filled. I think the way that it works with a broker, when they take the other side of your trade, you go long, they go short, they hedge the order out to a dark pool to cover themselves. Yeah. That hedge, there wasn't enough people to do those hedges for them when they took all those trades. That's why they went bankrupt. Nothing they could do. But, you know, it was fun at the time. I remember being on the phone to my wife saying, I just made 2.5 grand. She was like, oh, wow, brilliant. Can you draw it out? No, I can't get in touch with the company. Yeah. But yeah. All good fun. It won't happen again. Well, I don't know. It could happen again. The Chinese yuan, yeah? We were talking about this the other day with BRICS. Is this where the Chinese yuan gets unpegged from the US dollar? Don't know. If so, do you really want to be trading the yuan at the moment? Probably not. And when they do, if they do, what impact will that have on the US dollar? What will all the other US dollar crosses do? Probably the next big potential black swan event. We won't know when it's going to happen. The Swiss did not tell us that was going to happen. At no point did the Swiss turn around and say, oh, by the way, we're thinking about unpegging and this is when we're going to do it. If they had, everybody would have pulled out and it would have been catastrophic. I thought the Swiss was pegged to the euro. Yeah. What did I say? Well, it's the Swiss franc peg. Was it? Yeah, it was the euro it was pegged to. I think it was euro, wasn't it? Yeah. But the yuan is pegged to the dollar. I didn't even know what a peg was then. That's how I learned about pegging. That taught me what a peg was. And then I was like, oh, that's why people don't trade exotics, because they're all pegged to something else. So if you're trading the Hong Kong dollar against, or the Singapore dollar against something, you're actually trading the same as the US dollar against something. So what's the point? That's why no one does exotics. Pointless. Because it's the same thing as another thing. That goes up with it. They move in tandem. It's a peg. That's how I found out about them all. Never again. What target do I have on UJ? Propulsion. Yeah. So I'm targeting 150 ADR, which is this propulsion gap. Watch this. We're almost at ADR, which is yesterday's low, and the previous day's low is ADR today. But I get the feeling what we're probably going to do is bounce here. I mean, they might sell the US dollar off more. I'm just watching the futures market at the moment. We ain't going anywhere on anything. So yeah, it's just targeting the top of that propulsion gap at the moment. It'll be dependent on the news tomorrow where this goes. I would find it hard to believe that they would try and put in a massive day ahead of non-farm payroll. So I think we'll find support here and just sit back up in here somewhere until tomorrow. And then obviously tomorrow it'll go where it goes. Don't forget we've got the Asian session though overnight. So the Asian session might rally the yen. So it might hit that overnight. I took a CAD yen short as well. That's nicely in profit. So I took CAD yen short on that break. So I took a break of that low after the reversal alert. Not a big target on that. Not a big stop either. Did people know the Swiss dollar thing was coming? No. Yeah, no, it just happened. Well, I don't know. I mean, this is the thing. I didn't know. If I'd have known, I would have... Well, I don't know what I would have done. But for many years after the peg removal, people didn't trade the Swiss franc because they were scared of it. And it wasn't the Swiss franc. It was the fact that it was pegged. There's nothing wrong with the Swiss franc. But obviously, when you've had a decoupling, if you like, it's very difficult for that currency to find its feet. And it found its feet very nicely because it started going to everybody in the world that had any money. Hey, do you want free banking? And everyone went, yes, please. So all the billionaires have Swiss bank accounts. And they made a lot of money doing that. Very cheap place to bank, Switzerland. So a lot of money goes for it. And that's why everybody puts their money there, because it's safe. Wasn't safe then, obviously, but it is now. I was with FXCM at the time. Didn't even know the peg was removed. Went to sign in the next day and was locked out of my account. Yeah. I think FXCM went bust as well, didn't they? So it was my broker was Alpari UK. So Alpari is still going, Alpari International. But Alpari UK... all goes to Alpari International now. Is Alpari available in the UK? What happened to Alpari? There you go. On January the 16th, 2015, it was entered into insolvency following heavy losses of the previous Swiss National Bank removed the franc's ceiling against the euro. Alpari UK named best Forex broker in Britain at the 2011 awards. Yeah. 5 years later, they weren't the best broker, were they? Look at that, 2013. Named best broker. See, all these brokers. You've got Alpari UK, who I was with. Then there's Alpari International, which is the holding firm. Then you've got Alpari US, Alpari this, Alpari that. Alpari UK went bust. Alpari as a company didn't. It was the UK arm that I was with that went bust. A lot of shake-ups after that. Fun. This trade for us, by the way, we were looking at this morning. A new prop firm has arrived, which is actually by a broker, AvaTrade, who are actually a very well-established, very well-known broker. They've set up their own prop firm. I've been reading the rules this morning. As you can see, I've got all the all the FAQ tabs open, and I've been going through them with a fine-tooth comb. So they're not bad as a prop firm. It's a normal two-step, but when you compare these guys, because I was looking at them as a, shall I put these guys on the comparison list on the website? When you compare them to my Forex funds, they have a 10-day minimum, which when you look at the prop firms at the moment, they're all dropping the limits on these things. So when you've got minimum days, yeah, most of them are 0 minimum days now. My Forex funds nominal valuation is 5. So my Forex funds have them beat on the minimum days because this new company, Trade for Us, requires 10 days. Alpari. My Forex funds has no maximum now. They have a maximum of 30. So you are constricted to having to hit your target within 10 to 30 days. So you've got a 20-day window to hit target. You can't hit it too soon. You can't hit it too late. You've got to hit it there. There's a Goldilocks zone. Not ideal. Their evaluation is $50 more expensive. Their target is 2% higher. So I can't see any reason why you would want to use this company, apart from the fact they're a very well established, very well renowned broker. But they're more expensive. The rules aren't as good. They do allow EAs. There's no restrictions on EAs. There is restrictions on copy trading. There will be restrictions on using EAs that will pass your evaluation EAs because they all take the same trades. But apart from that, nothing wrong with them. They pay by deal, exactly the same. My Forex funds, yeah. So it's all the same setup. But my Forex funds have them beat on price, trading conditions, target. They don't have them beat on profit share, but profit share does increase with my Forex funds. You never get to it. But at the end of the day, whether you get paid 90% or 75%, when you're being paid on a 10 grand, is the difference between 1.5 grand. Making 7.5 grand or 9 grand, it's a lot of money. Doesn't matter. In the grand scheme of things, I don't think it makes any difference. So, and it's two-phase, except they've got a 10% target, not 8. And the max loss is 10, not 12. So, you know, I say it in here every time somebody comes up with a prop firm, you will not beat that. That is the best offering out there now, and it is the best offering, has been the best offering for months. So you can't beat it. Right, so NASDAQ out $1,000. 530 loss on S&P. And obviously S&P is now gone short. So there's a potential to take another little loss there. So that will pay for that. That I didn't trade today. So pretty much a duck at the moment. If this breaks short though, the S&P, be a nice profit today. So be 1,000 plus whatever I make there. Not really doing a lot at the minute. When do you choose to position trade versus using stops? I only position trade. On my accounts, yeah. So on prop, I use stops. Don't position trade on prop. So this account here, yeah. So this is using stops. Hey, look, what happens when you use stops, everybody? This is one trade, by the way. I'm risking 2.5% a trade on this account. This is account I'm just trying to double at the moment. So I'm in massively high risk. I've only taken 3 trades on it. All 3 losers. This is what we keep talking about, isn't it? Yeah. So strategy that I trade, support, resistance, bounce, using market reversal alerts. Yeah. Usual stuff. Using a stop loss. And when you use a stop loss, you get stopped out. So New Zealand dollar Swiss. Tried to play the bottom. So that's a triple bottom bounce, which I took yesterday. Going to a bit of profit. Probably not quite 1-to-1, is it? But came back down, stopped out, broke that high again today. So I thought, okay, that's a liquidity run on the lows. So I took another one, stopped out. Nothing wrong with the strategy, double bottom bounce. But when you use a stop loss, when the market goes up and down, which it does, all the time, you get stopped out. Yeah. But if you want to make money constantly, position trade, obviously. That's what I do day to day. Prop, the reason I'm doing that account is basically just try and get the holiday paid quickly. Have to swap broker because TD365 is showing totally different ADRs. You can't use MT4 on 365, so I don't know what you're using to measure ADR, but it's not my stuff. So make sure the ADRs will be different. Oh no, they do MT4 now, don't they? But there's no point in using MT4 with TD365 because the only reason you would use TD365 is because they have fixed spreads. They don't offer fixed spreads on MT4. So you might as well just use a different broker. But it's up to you. You can use TD365, nothing wrong with them. They're a very good broker. I've got an account with them. But they don't. Just their MT4 platform connectivity is not that good. So Peter, don't worry about the too much about ADR. It sounds like you are using ADR and you're trying to scalp ADR a lot. So I would, if you're going to position trade, focus on RSI. Yeah, this is what I position trade with. I don't position trade with ADR. ADR is a scalp strategy, intraday. Thoughts on GJ? That's a difficult one today. So yen, we've had a lot of strength in the yen, which started yesterday. We had a little bit more coming through today, and then obviously the pound dropped off of the interest rate. So if you look at the other yen pairs, they've dropped hard today, and we've gone into an accumulation. Yeah. So the yen is strong at the moment, as you can see, against everything today. So when you look at the pound yen and you see this pushing up, that's because the pound's currently having a little bit of a rally, but we've still got a strong yen. So the question is, will the pound continue to strengthen up tomorrow? And will the yen strengthen up more overnight? So they've started another move on the yen. Whether they will follow through on it, they do this quite often, and then it peters out. And then they have another crack at it, and it doesn't go anywhere. Yeah. So this could be just an intermittent blip. We're going to get that sort of move, but it's a good long opportunity, better long opportunity than short opportunity at the moment, I think. Until that US dollar gets to 145 against the yen, then I'd want to be doing nothing but shorting everything against the yen. Right now, it's nowhere. You're in the middle of a rangelet. Ignore the blip. That's news. This is where this was trading. Right now, you're bang in the middle of it. So if you get in long there, you could scale into a second down there and get out in all likelihood, because we are just in a range. This was the Japanese saying, hey, guess what, guys? Tomorrow, we're going to tell you something really exciting. Okay, we'll buy the yen. Oh, was that it? Yeah, so the market was just a knee-jerk reaction to a potential that didn't happen. So we're back in the range again. So business as usual, really. But it's more of a long than a short. And it's an ADR hit. But I would watch what happens when you get to here. But look at it. I mean, it's just a nightmare. Just goes sideways all the time at the moment. Just not much fun. So I'd leave it alone. Are there any trading simulators you recommend for manual backtesting? Well, yeah, Strategy Tester. What's wrong with that? This is interesting. Interesting results I'm getting here. Not telling you what it is because it's a secret. Secret. If I don't tell you it's a secret that's only the banks and I know, I can't sell it. Yes, use them for the indices because the spread was good. Yeah, Peter, but the spread is not good in 24. Look at I'm jumping around in the chat a minute, but look at TD365. Yeah, tight fixed spreads. That is only on their web platform. Yeah, fixed at less than a point on the DAX. Euro dollar less than 0.6. Yeah, these are fixed spreads. They never change. It literally never changes on their web platform. On MT4, it's not. It's spread betting. So on your MT4 platform here, they're good. Spread's too wide. I tried it. So only use TD365 if you're not going to use MT4. Euro odd is a good short. Yeah, talking about simulators. Yeah, I mean, just use strategy tester in visual mode. Yeah, it's just. There is an EA for strategy for the strategy tester by FX Blue, which is really good. No, it's not by FX Blue. God, I'm not going to find that. I haven't got it. There is a simulator for MT4, which is really good, and I can't remember what it's called. I thought it was by FX Blue. No. Trading Simulator version 3. There you go. Yeah. So yeah, they do one. There's another one as well, and I can't remember the name of it, but this one will be just as good. So here's a link, MT4 simulator. So basically what that does is it's an EA that runs in the strategy tester. And basically you get this panel and you can place trades. So you can watch the market play out in visual mode in the strategy tester and actually place trades into the simulation. Yeah. And then adjust them. So if you want to do manual trading, the other thing you can do is you can always use the Price Action Toolkit, my one. This works in the strategy tester. So you can use this and place orders manually with the Price Action Toolkit. That will do it. That works in strategy tester as well. It's got a in the settings, you've got show trading buttons, and then you've got activate buttons in tester. So when you're running in the strategy tester, if that's set to true, you can place trades. So either or, both are pretty good. Euro odd. Finish. I think I've already covered Euro odd, but yeah, I'm short at the moment. Second entry up at that high. So this is a 3 month ago high for a second entry, averaging down into that propulsion, the RSI extension. Adil, you don't use stop losses. Difficult to get funded. What about the max daily loss? Yeah, I don't use stop losses in my everyday trading. For funded accounts, I do use stop losses. Different strategies. Using ADR more as targeting. Yeah. Didn't you say use RSI on indices? No. No, I don't use RSI at all on indices. Indices are intraday scalping. You could do. I mean, the reason I don't use them, if you look at a stock index and look at RSI on a big day in a stock index, what you tend to find is you got extended there. Yeah. On M5. So intraday, the RSI is not very good. Some days it can be good, but on a trend day, it's not. So when you're scalping, like I said on in the ORB strategy video and in all the documentation about the strategy, there's two types of days. There's a rotation day and a trend day. You don't know which it's going to be. In a rotation day, RSI extensions are great. In a trend day, they're not. In a trend day, you will get cut to pieces trying to buy off of RSI extensions. Yeah. It just doesn't work. And longer term, just take that off the 5 minute. Longer term, I don't position trade indices just because they will, at the moment, the DAX is obviously sideways. It's fine. But when you're in a trend, like with the S&P, yeah, the pullbacks you find on the S&P, remember we looked at it on the daily chart, only come back to the 24. Yeah. And what you'll find is some of the pushes up will be very gradual and slow. And they might have a little spike in them as they do that. These will all be RSI extensions. And if you're in a continuous 1 year uptrend on the S&P, these just don't work. I've back tested it. They do work for buying. Yeah, I use the there's a set file for the opening range breakout EA for the S&P, which is the one that I use. And it only buys, it's a buy only, long only strategy, and it buys on RSI extensions to the downside on M5 or M15 reversal alerts. That's only working in a full calm trending market. And I only use buys. So if you look at this one here on the S&P, because we are actually back in a trend now, I would have gone long there, 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 and there. 4 trades. That one, that one, that one, and that one. That's it. But the accuracy of it is astounding. If you go and get the market reversal alert CA, it's on the set files page. Here. There is also an S&P 500 strategy here, which is here. And there you go. This is basically just exactly what I've just explained. But so you buy the dips, but rather than buying the dips and using a stop loss like everybody else, it's very similar to the way that Larry Williams used to do it. You buy the dips, and if the dip doesn't work, you dollar average DCA into the position and you wait, because the stock market is engineered to increase. That's the whole purpose of the stock market. It doesn't go down. If it went down, it means all the companies are not doing well. If the companies aren't doing well, the shareholders will sell their stock. Therefore, they always do well. Companies do not miss earnings for more than 1 quarter at a time, because if they do, the management is replaced. The board is changed because the stock price has got to go up. That's how they make their money. So the markets will go up. All these markets you see that are priced here now will be priced there next year, there next year, there next year. And in 20 years' time, those will still be higher and higher and higher. We won't be talking about the S&P in the 4,000s and 5,000s and things like that. Yeah, we're 4.5 on the S&P. In 10 years' time, we'll be talking about the S&P in the 15s and the 20s, because it will continue to do this. So that's how they make the money. The S&P averages 8% a year. If you only buy the dips on the S&P, you will outperform it. That's what Larry Williams did. That's what I do on my kind of pension account, if you like. And that's what Warren Buffett's done for decades. Because that's what it does. The stock market goes up. Banks don't not make money. This is the banks. This is the banks holding the business's money. It's just a measurement of business success. That, you know, the top 500 businesses in the UK, how are they doing? They're always doing well because they're the top 500 businesses in the UK, in the US rather. So they just keep going. Same as the FTSE 100. It's the top 100 companies in the UK. They do well. So does the Dow, the NASDAQ, and everybody else. That's what stock indices do. They go up. Always have done. Always will. Something's got to be pretty catastrophic. I know, like a pandemic. Hang on. What happens in a pandemic? The stock market goes up. Why? Because the companies are shut. That's not right. No, it's not. This is what this is. This is COVID. This is lockdown. Businesses closed, unable to trade, unable to profit. Stock prices going up. Someone's got to pay for that at some point. We all did. There. It's called a recession. But we're back to normality. We've got the interest rates up now. Inflation's starting to come down. We're starting to get back to what we used to do before COVID. Business as usual. Until the next thing. Housing market. At the moment, massive bubble. That's about to pop. That's going to drop on the housing market as well. At some point. We've had the housing market in the UK drop for the first and fastest time last month. So we'll come in. We haven't scratched the surface of this thing, I don't think, yet. Peter, I was on the web platform and now was thinking use them for position as well. Yeah, you can do. But I don't think with TD365 you get the leverage, do you? UK broker. I don't think you can get more than 30-to-1 leverage. It's for scalping. I mean, it's a great broker, but not for position trading, I don't think. You have to have a look and find out what their leverage is. Not very clear, is it? Probably under margin. Oh, it's spread betting. Of course it is. It's spreads. This is not CFDs. This is spread betting. This is gambling. Good advantage. Here you go, 30-to-1. So you can't position trade with these guys. There's no leverage. Scout with them manually. Lens, TD365 offer 1 to 200. Not in the UK, they don't. You can also trade with up to 30-to-1. They might offer higher leverage on other instruments. You might get better on indexes, maybe. Yeah, there you go. You got that's 50-to-1. So you might get higher on other things, but not on FX. You got to do your homework on brokers because they're all so unbelievably different. Soft for F. That's it. Soft for FX. Crom. Crom's remembered. This is the other trade simulator. This is the one that I used to use. You have to buy it. So I'd go and try and use the FX Blue one first. But this is the one that I used to use. You can control the tick speed. It's a godsend. The speed management in the simulator is awful. This slider bar here, yeah, it's like slow, a bit faster, lightning speed, slow, lightning speed. That's all you get. Lightning speed on 32. 31 is too slow to actually watch. Awful. This thing has its own independent speed controller, and you can adjust. So you put it on 32 and you use this to control the speed. It's amazing. You can actually properly control the speed of the backtester in visual mode. But I think it's $50, something like that. $109. Yeah, so that's quite expensive. So I'd try the FX Blue one first, but that is really good. I can vouch for that because I've used it. I used to use it a lot. It's how I developed my Bollinger Band strategy using this. Actually trading, I used to have a Bollinger Band mean reversion strategy. So used to, still exists. It's just another strategy, but it's yeah. In the Bahamas, TD365 offer 1 to 200 in the Bahamas today. Oh, okay. So they'd need to move me to the Bahamas. That's fine. If they can do that. It seems to be a logarithmic scale. It's not good, is it? Total chop fest. These days, so that loss should have been, actually that's not too much. It should have been a 2k loss on that. I'm over leveraged on this. I'll use way too big a lot size. I've also changed the EA to use fixed lot sizing for backtesting purposes as well, rather than percentage. So this is actually risking way too much. But anyway, but that trailing stop edge strategy, these are the days it's designed to get you out with less than a 2R loss, which it's done perfectly there. So that's a perfect example of it saving you money, and that's a perfect example of it trailing a runner. It's all working, it's coming together. It's going to be a good EA, that, when I finish it. Bloody complicated though, so it's not taking 5 minutes. There you go. There's another example of the M15. So this is the market reversal alerts EA trading on M15. This is the position trading strategy for S&P. So that there is one of those. Yeah. That's what the market reversal alerts EA is doing on the lower time frame. Scaling in to the pullback. I've been doing some testing on this because I'm thinking of reactivating it now. I've been doing some testing of this on H1 instead of M15, and I'm getting slightly better results for a drawdown. So it might actually be better to use hourly instead of 15-minute. You get less entries, but you get more. You get less drawdown. But if you're using a lot multiplier with this, these M15 entries actually with the lot multiplier, because you can hold these because you're guaranteed to break the high, aren't you? Yeah, in a pullback on a bull market, you're going to break the high. So you know where price is going. It's just a case of trying to pick the turning point. So the scaling and averaging into the turning point is where you build your position size. So using a 1.3 lot multiplier on M15 actually gets you more lot size on. You actually make a lot more profit, but you get more drawdown. So it's the payoff is making a lot more money out of the scale-ins, but you take a lot more drawdown along the way. So there's a kind of an aggressive and a non-aggressive version of it you can do. H1 being the non-aggressive version, M15 being the more aggressive. But there's the set files there. Oh, I've got an M15 aggressive as well. Look. You can test those set files. Go and play with it. Adjust them, tweak them to your liking, but do not use it in a bear market. Does not work. Definitely does not work. Can you please explain how the ADR level indicators move over time throughout the day? Yeah, so basically, I can do better than that. I can show you. Let me just quickly grab these results. Wrong one. I'll tell you what I'll do. I'll do the back testing here. That'll do it. So, oh God, I've got to regenerate a history file with that. So, with ADR, basically, as soon as the day opens, yeah, we plot ADR from the high and the low of the day. Yeah. So if price is going to move 100% of its average daily range, it basically has to move from where it opens all the way up 100. So if it goes screaming up straight away, that line will be 100% of the average daily range. This line here, as price moves up, this line will move up with it. Because if price moves up to there, yeah, we have to pull the ADR line up because we've moved up half an ADR. So if we move down by half an ADR, we've only moved half an ADR. So if we move down by another half an ADR, we've moved up half an ADR, back to the middle, and down half an ADR, meaning we've moved 100% of our average daily range. Yeah. So the lines adjust themselves with the highs and the lows of the day. Yeah. So you'll see as price is here, as this moves up, these lines move up. And as it moves down, they stay where they are. Yeah. And if this moves down below that level, these ones will move down. Yeah. So the distance is always going to be an ADR away from price. Yeah. So if we speed this up, you'll see what I mean now. Look. So that is on 31. And this is 32. This is all, look, all of this is the same. Then you get to 32. Rubbish. It's just always been like that. I need to really scale out for you to see this. Let me do this on M15. Be easier to see then. Okay, so the distance from price, the low of the day at the moment is here, that wick of that candle. So from there to there is 100 ADR, which is at the moment 122. Yep. So if I measure that, yeah, that's 122 pips. Okay. So if we move through the day, you see we moved down. Yeah. So the low is now not there. It's now down here. So this line is not now here. It's here because we've moved down a little bit. So now for this thing to move up 100% of its average daily range, it has to go from that low up to there, 122 pips. Yeah. But you will see that the low of the day, the low line, hasn't changed because the higher the day is there, and from the higher the day to that low is 122 pips. Because we've come down, this doesn't move. Because for price to move 122 pips, which is its average daily range, from that high, it has to go down to that line. But if price now moves up to there, this line will have to come up because the distance it's moved today will be from there to wherever it gets to. So we have to remove that amount from the line where it was and move the line so that when we've moved up and down like this, yeah, that is not 100% of its average daily range, is it? Because it's moved up 50% and down 50%, and that, you know, get what I mean. But if you see it play out, it makes sense. Yeah. You see it moving up and down. So from that high point there down to there is 122 pips. From that low point there up to there, 122 pips. So if we're going to move 100% of our average daily range, which is 122, we've got to go from the low to there. That is 122 ADR, average daily range. So if it moves up and down like that, 100 pips for 10 days on the trot, ADR will be 100. So to get 100 pips of movement from the low to the high, the line has to be adjusted. These indicators, some indicators out there, you will find some ADR indicators will basically draw from the open. They will go up 100 ADR and they'll draw a line. That's wrong, because if this thing measures 122 pips, take it in this case, right, 122 pips from the open up, and it draws a line there. If this moves down 50 pips and then moves up and hits that line, what's the movement today? 50 plus 122. That's 172. That's not ADR. ADR is 122. So these people keep, and this is something that gets emailed to me all the time, and it drives me mental. Your ADR indicator doesn't work. For some reason, it's moving the lines and it's not drawing ADR in. ADR is 122. The line's much closer than that. And I send them to the video, but they have other indicators that draw lines in a distance. That's just a random line. You might as well use a pivot point. It means nothing. All that means is, on average, this has moved to 122, but what you've decided is to put a range in today of 244. Why? What significance has 244 got on what this has done in the past? Nothing. That's a 200 ADR move. Yeah, some of them draw in 50% ADR and 50% ADR. So they give you a 122 pip range. So basically, if it moves up to 50% up, it's saying he's moved 100% of his average daily range. It hasn't, it's moved 50. Just because you've put a line 50 down and measured that as ADR, you're assuming that price is only going to do that today. It doesn't do that. It does what the hell it likes. So you've got to have a dynamic measurement. Yeah. And that's why we use ADR. If this thing pushes up to here, that's normal. If it pushes up to there, it's done 50% more than it normally does in a day. This is bigger than the moves we've had for the last 10 days. And that is the only way to measure ADR. I don't care what anybody says. They're all wrong. This is ADR. It's mathematics. It's maths. It's not. It's like saying, I don't know, we didn't evolve from monkeys. We did. We've got proof. I can mathematically guarantee this is right because I can put it in maths. It's, you know, it's like gravity exists. We've got equations for it. It's not just a case of you hold an apple up and you drop it and it hits the floor. It does it for a reason. There's maths behind it because of rotations and gravity and all sorts of. This is ADR. I can explain it until I'm blue in the face to some people and they still disagree with me. And that's fine. But you're not measuring the average daily range. If you're doing it different, you're measuring a fixed level from the open. That's fine. There's lots of things with pivots. There's all sorts of stuff you can use to measure fixed lines from opening prices. But if you want to measure how far this is moving up and down in a day, it's average daily moving up and down, which we call a range. That is how you measure ADR. And to do that, you have to move the lines. It does confuse people, and I do get why. And it took me a while to get my head around it as well. Yeah, look, it comes down because price went down. But when it goes up, it doesn't go up. Yeah, because if it went up, you'd never get to it, would you? Yeah. That's hit its average daily range. You see, this is why it stops, right? This is why I built the indicator. You see how twice there we hit ADR, we stopped. We hit ADR, we stopped. Because on average, that is what it's done in the past. It's got a certain distance this thing can move in a day because there's a certain amount of currency available to the banks. There's a certain amount of movement they can produce before it becomes unprofitable. There's a certain amount of things they have to do in a day, and there's only a certain amount of hours in a day. So you can only do a certain amount of stuff. You can only move a certain range, an average. So you take an average on what this thing's doing, you know roughly where it's going to get to. It doesn't do that all the time, but you saw there two perfect examples. It went up, hit ADR, came off, went up, hit ADR, came off. As you get above ADR or below ADR, it stalls. But 60% of the time, it doesn't get anywhere near them because it stays within its average daily range. There we go. So there's an ADR hit again towards the end of the day. But it took all day to get to it. And then it stopped because it hit its average daily range. That's what it does. This is why I use it. So when you start getting close to it, you know that it's probably knackered because it's, it's like running a race. Look, it struggles. It's like you being a 100-meter sprinter and someone saying, go out and do a 200 meters. At 100 meters, you're going to start running out of puff because that's what you do. When you get to 150 meters, the 200-meter sprinters, they're going to be gone because you're a 100-meter. If you're a 100 ADR instrument and someone says we're up to 150, you're going to be going, I haven't got any more buyers in me. You can run out of steam. That's what it does. That's why we use it. Doesn't mean it's coming back the other way. It just means it's going to find it harder to get further. So it's a tool for, there you go, look, perfect. All right. It pushed down, it pushed up. We saw an M pattern reversal. I went short. Bang. We've hit our average daily range. Take profit. Yeah. Everyone wants to use it as a get in tool. I use it as a get out because if we got to the ADR, likelihood is we're probably going to find it hard to get further. Exit the trade. That's what it's there for. It's to show you, on average, you shouldn't expect to get more today out of this. Do you want to hold it till tomorrow? That's the question ADR is saying. You're short. Excellent. Now, do you want to hold this overnight or do you want to take this? Is there enough money there? Have you made enough risk reward today on that thing? Yes. Brilliant. Well done. That's all it's doing. But it's also saying, hey, we've hit our exhaustion point. At this point on M5, M15, RSI will also be extended below the 70 level or 30 level in this case because it's a short. So you're going to have an RSI extension telling you the same thing as ADR, which is why I say ADR and RSI are the same thing. They're condition indicators. They tell you the condition of the market is stretched. It's not a signal to get in. It's telling you the market's stretched today. Yeah. Thanks for subscribing, Patrick. Welcome aboard. Yeah, so there you go. That's the explanation. But that is in the video. There you go, look, 175 ADR. News event. Yeah, it's not going to comply on news because news drives the market twice as hard and you're going to get above ADR on the news, which is why I say, don't look at you hear me say it every day in here. There's been some ADR hits this morning. I'd leave these today because it's a news event. It's a fundamental shift. The reason we've gone beyond our normal range is because they've given the market a reason to pump a load of cash into that thing. Doesn't mean it's not coming down, but it means today just be careful because it's probably going to go higher. But look at that ADR 175. A lot of people use 150 to 200 as their entry points because by the time you get there, this thing needs to do what? Take profit on that move. So when you use ADR, you can use the high extremes as entry points. Wait for price to come down. There you go. You got in on the 150, 200. You exited the next day. It's an intraday tool, ADR. It's measuring intraday movement. The next day, yesterday means nothing. Today's a new day. What happened yesterday is gone. What's going to happen today? Let's start again. This is why it resets every day because you've got to measure the daily movement intraday. You could build a weekly version of it, which is what the dashboard does. Yeah. So on the ADR dash, we've got, that's the RSI. We've got the weekly and monthlies. So this tells us when we get into our weekly levels. This tells us when we're getting to our monthly levels. Everything's got an average. So if we hit our weekly average by Wednesday, it's equivalent to hitting your daily average by the middle of the London session. Same principle. There's a good chance it might bounce back from here because it's done what it normally does in a week. Have we had any news? No. Okay, well then it's probably exhausted, isn't it? Have we got any news coming up? Yes. Well then they might well move it to use it to profit take that move. It's just a measuring tool. Again, it's not a holy grail or anything magic. It's literally just identifying a market condition that you can use to your advantage. Like today, we've just had some yens, haven't we? Pound yen. Yeah. Look. Sold off. Where did we stop? ADR. Knackered. US dollar yen. I don't know what that's done. That's hit ADR. Right. So there you go. What was I saying earlier? I'm short on this. I expect it to bounce. Why? Because we're at ADR. And it's also previous day's low and yesterday's low and ADR. Confluence. Previous area we pushed into, stopped at, tested, finally broke, tested, support resistance. You know, I'll keep saying it, but this is why these indicators are on my chart and nothing more complicated. Lines where price has been to before, support resistance, it works. Average daily range is what really all the banks can do with the thing. Yeah, move it a certain distance. That's why it works. That's why it's there. Reversal alerts. When it does that, it means that the buyers ran out of steam and the sellers took control. The buyers had another crack. The sellers knocked them back. The sellers are in control. Get in the market. If that happens at ADR, at a support resistance level, when the RSI is extended, it doesn't take a rocket scientist to tell what's likely to come next. Very, very simple, this thing, but it's also completely random. So when it gets to ADR, sometimes it will go down to 200 or 175, just because whatever, we don't know. It just does sometimes, but most of the time, and this is why these numbers are there, it stays within those levels. 12% of the time, it goes beyond 150% of ADR. 1 in 10 days, it will go beyond that level. Yeah, 12% of the year, it will exceed that. But that gives you an edge. If you get to that level, only 12% of the year it goes beyond it. The rest of the time, it doesn't. It gives you an edge. 225 ADR, 2%. 98% of the time, it doesn't get beyond that level. So if you get to 200 ADR, you know your odds are pretty damn good of that happening next. Maybe not today, but tomorrow. That's what it does. It's just telling you what the condition of the market is currently. Not telling you anything more complex than that. That CAD yen will be working out nicely. Oh, it's all working out nicely. Got to that to pay for, but so down 5.6% on the first 3 trades, up 4.3 so far on the next 3. So total reward on these TPs is $2,000 and 600 down at the moment. So potential 1,200 this week if we get some continuation on these moves. I'm not going to bother taking that again. Right. Are pivot point indicators based on ADR? No. There's lots of ways to calculate pivots. If you go and look at pivot points, I think there's a Baby Pips have got a good explanation of it on Baby Pips. God, I haven't been here for years to look at stuff, but there's many calculations. Investopedia is probably better. There's lots of different formulas for pivots, and how you calculate them will depend on, or how they appear will depend on the formula you use. There's lots of, you need to basically read up on them, but there's lots of different versions of them. All I will say is I traded pivots for, if you want to know about pivot points, there's a really good Forex Factory thread on the forum by David. He is kind of like the master of pivots, if you like. One of the reasons I got into position trading was because of pivot points as well. There's a lot that got me into position trading, but pivot points, I realized that they are just support resistance lines based on a mathematical calculation. So in that respect, they're the same as Fibonacci. Yeah. So when you draw your Fibonacci, yeah, and you get a 38, a 50, a 61.8, a 71.9 retracement, yeah, that is basically saying what could happen next is either that, or that. If we're going long, if not, that's going to happen. Does that give you any advantage in your trading? Because you've drawn a thing on there and you've identified some lines that the price may get to, and if it gets to them, it may bounce at. If may, something will happen in the future, no idea, flip a coin, get your crystal ball out, whatever you want to say. Doesn't help you in any way, shape or form. It gives you a system to place an order, to enter a trade, and potentially somewhere to put a stop loss as well. But that's all it does. It doesn't help you because that means nothing to the guys that are driving this thing up and down. They're not using Fibonacci. They're getting in and out the market. Pivot points. Traders don't use them in banks, right? We create them to show us extremes as to where price could go based on the past. ADR tells us where price should go to on average based on the last 10 days. Pivot points do a very similar thing. They draw lines on your chart which may or may not act as reaction points. I identified through David's system that if you placed orders at multiple ones and waited, you would get a bounce back, a grid trading system. Obviously, it failed dramatically because it is a grid trading system, but it's the same thing. Everything you find in trading is the same thing. It's a different way of plotting the same information on the chart. You still don't have any advantage from it because it doesn't predict the future. So pivot points are great if you need a system. The thing with when people get into trading, the only way you can make money is by pressing the buy or the sell button. So what you look for is a way that makes it work more than something else. So you need a system. What everybody wants is a simple system. So I know this pivot points thing, all it does is draw lines on the chart. So all I do is take trades there. How simple is that? I wait for price action there. So I'll wait for a bearish engulfing at a pivot point and I'll press the button. Great. Why not do that with Fibonacci? It comes built into your MT4 platform. You haven't got to get another indicator. Or if you're going to use pivots, which version of pivots are you going to use? There's about 5 or 6 common ones. Which one should you use? Or I don't know, I'll use that one. Okay, but if I combine that with the RSI and all of a sudden, boom, you're system hopping. Because the pivots worked well for a week and then all of a sudden you had 5 losses in a row and it didn't work out. So hang on, let's put an RSI in there to try and filter it. Okay, so what's RSI telling you? Price has gone up. Yeah, okay, what's the pivot telling you? It's gone up. Okay, so if I combine the two together, what am I doing? Getting the same information twice. Excellent, I'll use those. Boom, off you go. Then that doesn't work. So then you go and find something else and you end up in that cycle, which is what you never get out of. That's basically what pivots are doing. ADR, however, is a mathematical calculation that I use to tell me what the average range of this instrument is. Yeah. So pivots show you where it's possibly going to go for some reason, whatever that calculation is. And that maths is that maths. If that maths works 20 years ago, what makes you think that that maths will work now? I don't know. But ADR is a measurement of the last 10 days. This is always 100% relevant to the current market conditions of the last 2 weeks. So it helps us to understand how volatile a currency is. ADR on the pound New Zealand 4 years ago was 400 pips. It's now 108. That's US. Sorry, it's 210. Yeah. So the pound New Zealand's ADR is 210. I was trading at 450 a few years ago. So what is happening now is nothing different to 4 years ago, except the amount of distance that this goes up and down now is different to what it was then. The movement is the same, the distance is different. This is how ADR helps you to understand each currency. Yeah, the average daily range is a movement within that currency. The ADR of that is different to the ADR of that. Yeah, 23, 84, 62, 145, 76, 86, 59, 135, 179, 197. All different. So if you said, I'm going to go long on EuroCAD with a 10 pip stop, yeah, on EuroCAD, a 10 pip stop is 10% of the daily movement of that instrument. If you went long with a 10 pip stop on the oil, for example, you're going long with 50% of the average daily movement of that instrument instead of 10%. That's a big difference, isn't it? So you don't go long with the same pips. You go long with a percentage of the average daily range of the movement of the instrument. So if you want to keep your stop outside of the average daily range, you need to calculate what the average daily range is to make sure that you're getting outside of it. If you're trading daily charts and this thing moves up and down 110 pips in a day and you're looking for a 3-month short, do you think using a 10 pip stop or using 3 times the average daily range of the instrument is the best thing to do? Obviously. So you need to know what ADR is. Because if he's taking a short on EuroCAD, that stop is going to be totally different to oil. So you've got to be able to calculate that. And you need to know how it moves intraday. Pivot points, however, are mathematical calculations which put price at a percentage of the movement. So they're similar in that respect. But what it does is it draws loads of them on your chart. And if you put pivots on your chart, you'll find a load of those pivots are outside of the average daily range. Chances of you ever getting to them are just so remote. So everyone uses R1 and S1, which are the closest ones. And of course, they fail a lot because they're too close. It just doesn't work. But again, you know, you're better off using a fib. Much better off. Go onto your hourly chart, stick a fib on it. Every time you get to a low, stick a fib on it. 38 retracement. Got a new low. 23 retracement. Got a new low. 23 retracement. Got a new low. That's the same one. 23 to 38. Got a new low. 38 retracement. Pivots. The point, pivot is just a point where something changes direction. It's a pivot. We pivot. All the same stuff, you know. It doesn't, and none of it helps, is what I keep saying. None of it helps. It just teaches you to do the same thing in a different way. Enter the market with a line that says, get me out if I'm wrong. Get rid of the line and use pivot points and you'll be good. I tried it, it didn't work. Because pivots are usually equidistant. That's the problem with them. Or there's expanding pivots, which get further apart the further away you go. So they're actually probably a little bit better if you wanted to scale into positions with them because your drawdown would be less. But I don't know. I never tried. They're mean reversion strategies. So in theory, they will all work with position trading techniques because position trading techniques work with mean reversion. Pivots are mean reversion. So go try it. I don't know. I'm always up for looking at new things. I went down the rabbit hole with pivots for a good 6 months. Just came back out of it no further on. That's the problem. Every time you spend 3 to 6 months on something new, you're adding 3 to 6 months onto your learning curve. And you're just not, all you're going to do is at the end of it, after you've done 10 courses at 6 months each, is you've spent 5 years figuring out that you can't figure out how this thing goes forward. And then you'll suddenly realize, if I can't do that, I can't trade, or I need to stop trying to do what everyone's doing using pivot points and switch over to ADR. Well, same thing. Anyway, you know what I mean. Right, so we had a bit of movement today, not a lot. So watch out for the news overnight. We've got the monetary policy statement tomorrow morning. Unlikely we'll get a lot of movement out of that. They might try and rally the market a little bit off the back of the statement, but it's basically going to say pretty much why they didn't increase their interest rates. We know that because they released the statement on Tuesday. So unless that statement says anything different to the Tuesday one, we're not going to get anywhere, which is why that's orange news. So tomorrow afternoon, we've got the Canadian unemployment followed by employment rate, well, actually at the same time. So 1:30 tomorrow afternoon, it all kicks off. So we'll see what happens tomorrow afternoon, but I'm not expecting a massive fundamental shift off of the US dollar, but you never know. We've had pretty average results on the US this week, so I don't think it's going to be anything dramatic, but we'll see. But lots of movement tomorrow. And then into next week, really flat. We've got the US CPI figure. That's it, pretty much. We've got a few bits and pieces on Friday, but other than that, next week is a total washout. So we're coming into summer trading. We're losing news for impact and movement. So this is why I'm going down to 3 days next week, because it's going to be getting into the doldrums. So, but we'll deal with that next week. All right, so have a good evening. I will be back tomorrow morning, 7:50 for the New York session, for the Frankfurt session, same time, 2:20 for the New York session. Anything you need, I'll be in Telegram until then. Otherwise, have a good evening, and I'll see you guys tomorrow.